The great OKLO rally of 2025 has finally come to an end. If you've been paying any attention to the post-April rally this year, you're sure to have an opinion on OKLO. This small modular reactor stock has gained as much as 800% at times this year without generating any revenue. But the price action this week is screaming, do not buy the dip. I'm Webster from FXStreet, and I'll break down why you should avoid OKLO stock in this video. OKLO has been a market leader in the untested but ambitious small modular reactor industry that seeks to provide bespoke nuclear power in an on-site format. This means that OKLO seeks to design, build, and operate small nuclear reactors for critical customers like hospitals, military sites, data centers. That last customer segment is key because OKLO's tenuous connection to AI data center capex is what has led its shares on a rampage from $21 at the start of this year to an October all-time high of $193. Husband and wife founders Jacob DeWitt and Carolyn Cochran met in the nuclear graduate program at MIT, where DeWitt conducted the specific research that would lead them to found OKLO. The company's star rose due to its connection to Sam Altman, who became its board chair in 2015 and took the company public in a SPAC deal in 2024. Altman left the board earlier this year, though many expect OpenAI to enter into a major power agreement at a later date, and he still owns nearly 5% of the company despite disposing of a third of his shares. The primary drawback to OKLO is that it remains a pre-revenue company and thus trades at a premium due to a lack of fundamental results to base its value off of. There's no revenue to account for, so the market does not evaluate it on traditional metrics. Any commercial project is not projected to see even initial revenue until late 2027 at the very earliest, and we're still talking about an untested energy technology here. OKLO's concept for its Aurora reactors might be groundbreaking and get off the ground much faster than standard nuclear reactors that are measured in decades of construction timelines, but projections point to annual commercial revenue of as little as $240 million 10 years from now. And that's, of course, without paying any attention to profits, which seem unlikely to pencil out in the interim. The negatives don't stop here. OKLO's current operations include the heavy selling of shares by company insiders. Management has offloaded more than $100 million in share sales this year alone. The heavy level of uncertainty and lack of near-term financial returns paint a picture of a stock trading entirely on hope. When Bank of America chose to downgrade OKLO shares on September 30th, it highlighted overly lofty deployment guidance on top of management's unrealistic cost targets, coming in 80% below real-world comparisons. That brings us to the daily chart. The mid-September to mid-October highs diverge from what we see on the relative strength index, while OKLO's share price rallied from near $140 to over $193 in that 4-week period. Mid-September to mid-October highs diverge from what we see on the relative strength index. While OKLO's share price rallied from near $140 to over $193 in that 4-week period, the relative strength index fell from an extremely overbought 88 to a still overbought 78 reading. This RSI divergence is a hallmark bearish reversal signal. It shows us that momentum is diminishing even as an asset produces new highs. OKLO's daily chart also shows us that this reversal is already in full swing. OKLO plunged over 12% on Tuesday and nearly 14% on Wednesday. But more importantly, it broke below the 15-day exponential moving average, a support level that has undergirded much of OKLO's recent bull rally. The daily RSI here on Wednesday reached a level it hasn't seen since April, pointing to a much worse momentum reversal in the past 6 months. Expect OKLO to quickly rotate back towards support at 110. However, a break of the 110 level would be a severe worrying sign, because that would likely require a break below the 50-day simple moving average as well, something OKLO hasn't done since May. If OKLO breaks below that purple 50-day, all bets are off, as traders should expect a complete end to this rally and a quick move to the $80 range or lower. So there you have it, folks. Earlier buyers have made bank on OKLO's explosive 2025 rally, but the lack of near-term catalysts have led them to pull profits off the table. And the RSI divergence is telling us the selling hasn't finished. If you like this video, hit the like and subscribe buttons and share your thoughts in the comments.